Imagine a moment when an entire nation believed it had discovered the secret to endless wealth. Ordinary people mortgaged their homes, and aristocrats pawned their jewels, seeking a golden promise. Everyone chased the same golden promise, a unified pursuit of unimaginable riches and prosperity. But then imagine watching it all vanish in mere weeks, leaving ruin and despair. This is the story of the South Sea Bubble, the modern world's first great financial catastrophe. It happened in 1720 in Great Britain, destroying thousands of lives. This event reshaped the very foundations of finance and how markets would be regulated. The catastrophe also changed how markets would be regulated, a monumental shift. But before the collapse came the dream, and what a seductive dream it was. Britain in 1720 was a nation hungry for opportunity, still nursing expensive war wounds. The nation was drowning in national debt that seemed impossible to repay without a miraculous intervention. This created an anxious moment, seeking an extraordinary solution to the nation's financial woes. Into this anxious moment stepped the South Sea Company, chartered to manage Britain's debt. They also traded with the lucrative markets of South America, promising immense profit. The proposition seemed elegant and remarkably simple: convert government bonds into company shares. Everyone would profit from the promised trade riches flowing from distant, exotic shores. The company's directors, led by the ambitious Sir John Blunt, painted vivid pictures. They spoke of Spanish treasure fleets and endless South American gold waiting to be claimed. Shareholders were promised a generous piece of these exotic fortunes from distant lands. The nation desperately wanted to believe them, indeed, they needed to believe them. What few knew, or perhaps chose to ignore, was that actual South American trade was almost non-existent. Spain controlled those territories jealously, severely limiting Britain's access by treaty. Political reality made the company's promises seem increasingly hollow and devoid of truth. These promises were fundamentally based on a reality that was entirely false. But facts mattered less than the intoxicating story being sold, which proved irresistible. In January of 1720, South Sea Company stock traded at £128. This was a respectable but unremarkable price, soon to seem quaint and impossibly distant. The price would soon seem quaint and impossibly distant compared to future valuations. Then something extraordinary began to happen that would transform the entire nation. The stock started climbing, slowly at first, then with gathering momentum and unstoppable force. By March it had doubled, and whispers of easy fortune spread like wildfire. These whispers of easy fortune spread through London's coffee houses and aristocratic salons like wildfire. The company's directors understood the power of perception, engineering an aggressive campaign. More darkly, there was outright bribery and corruption to secure favorable legislation. Politicians received shares on generous terms, ensuring favorable legislation and silencing skeptical voices. Official approval drowned skeptical voices in a chorus that silenced all reasonable doubt. Even King George himself became a governor of the company, lending royal prestige. The weight of the crown added significant legitimacy to the enterprise. When the monarch endorsed your investment, how could it possibly fail? Refusing seemed like rejecting prosperity itself, defying common sense and good fortune. By spring, the frenzy had truly begun, consuming the nation in a collective madness. Servants borrowed from their masters, clergymen mortgaged church property, gambling life savings. The stock price climbed to £300, then £400, still insatiable. The appetite for shares seemed insatiable and ever-growing among excited investors. What made this mania particularly devastating was its democratic nature, reaching every society level. This wasn't just aristocrats playing with excess wealth, it was ordinary citizens. They were staking everything they had on the belief that this time, wealth could be won. Fortune, they believed, now favored the bold and the quick, not the patient. The company kept issuing new shares to meet insatiable demand, oversubscribed within hours. People camped outside subscription offices, desperate to buy in before prices climbed higher. This created scenes of near riot and frenzied chaos, which authorities struggled to contain. Authorities struggled to contain this frenzied chaos with any measure of order. Meanwhile, the South Sea Company's success spawned hundreds of imitators, each more absurd. New ventures promised to drain the Red Sea for treasure, manufacturing perpetual motion machines. Others proposed trading in human hair for wig-making, schemes that defied all logic. These were transparent nonsense, completely defying common sense and rational economic judgment. One notorious prospectus advertised a company for carrying out an undertaking of great advantage. Incredibly, investors threw money at even this transparent nonsense, suspending all rational judgment. Greed triumphed over wisdom in an age consumed by rampant, unchecked speculation. This was an age consumed by rampant, unchecked speculation, lacking any rational judgment. The South Sea directors watched these smaller bubbles with alarm and growing concern. Not because they cared about fraud, but because competing schemes siphoned capital. They pushed Parliament to act, enacting new legislation to eliminate all rivals completely. This new legislation was specifically designed to eliminate all competing schemes. The result was the Bubble Act of June 1720, restricting joint stock companies. It restricted companies without royal charter and necessary government approval. The irony was cruel and would prove deeply tragic, using the law to pop smaller bubbles. Meanwhile, the South Sea Company floated inside a massive bubble, destined to burst. By June, South Sea stock reached £700 per share, incredibly soaring. By August it touched the astonishing peak of £1,000 exactly, a stunning rise. In just 8 months, the price had increased nearly eightfold, built on nothing but momentum. It was a tower of cards reaching impossibly toward the heavens before its inevitable fall. Among the victims of this madness was someone whose name symbolized human rationality itself. Sir Isaac Newton, the brilliant mind who had unlocked nature's deepest secrets. The man who unlocked the universe's mathematical secrets lost an estimated £40 million. This proved that genius offered no immunity to the contagious disease of greed. Newton had actually sold his shares earlier for a tidy profit, displaying wisdom. But watching others grow rich while he sat on the sidelines proved unbearable. He bought back in at inflated prices, then watched helplessly as his fortune evaporated. Newton became the victim of his own vanity and envy, a painful lesson. Later, Newton would offer one of history's most profound observations about financial markets. He said, "I can calculate the motions of the planets, but not the madness of men." Even genius offered no protection against the contagion of greed that had infected the nation. The contagion of greed had infected an entire nation, leaving no one truly safe. While Newton's losses were significant, he could absorb them without complete ruin. For thousands of ordinary investors, however, catastrophe meant utter ruin, destroying families and futures. By late August, the stock price had begun to wobble, showing the first signs of instability. Early investors, sensing danger, started selling their shares, seeking to cash out paper gains. Small sales became larger ones, and confidence began to crack under dawning realization. Confidence, the invisible foundation of all bubbles, began to crack and crumble. The Bubble Act, meant to protect the South Sea Company, now turned against it. As authorities shut down smaller schemes, investors needed cash quickly, creating a downward spiral. September brought the acceleration everyone had feared, the nightmare becoming terrifying reality. The stock fell to £700, then £600, and the mood shifted to panic. The same people who had fought to buy in now fought desperately to get out. They fought desperately to get out before losing everything they owned, fearing total loss. Directors tried to halt the slide with reassuring statements and promises of spectacular dividends. But their words rang hollow now, empty and unconvincing in the face of collapse. The emperor had no clothes, and everyone could suddenly see the truth. They had willfully ignored the naked reality of the fraud that had consumed them. The company had no real business, no significant trade, no legitimate source of revenue. It couldn't justify even a fraction of its peak valuation or investor faith. It was a magnificent castle built entirely of air and collective belief, now evaporating. Nothing but the harsh reality of devastating losses remained after the illusion dissolved. By October, the stock had collapsed to £400, then £300. The descent was as meteoric as the rise had been steep, a rapid, devastating fall. Investors who had bought at the peak watched 90% of their investment vanish. Fortunes built on paper dissolved like mist under sunlight, disappearing as if never existing. But the fall wasn't finished yet, and the full horror was only beginning to reveal itself. The crash would continue through autumn, its consequences echoing for generations to come. It reshaped the nation's economy and trust forever after the devastating crash. The crash would reshape the nation's economy and trust forever, leaving a lasting mark. By mid-September, the selling had become a stampede, a desperate scramble for liquidity. Desperate investors lined up outside Exchange Alley, hoping to salvage anything from their holdings. But buyers had simply vanished, leaving a market devoid of any real demand. The stock that once commanded £1,000 now fetched barely 300 and was still falling. The human cost became impossible to ignore, destroying families and livelihoods. Families who had mortgaged their estates now faced complete ruin, a profound devastation. Merchants who had invested their life savings found themselves bankrupt overnight. These weren't just speculators, they were ordinary people who had trusted the company and government. By October, the true scale of the catastrophe was emerging, dragging down even others. Banks that had lent money against South Sea shares began to collapse, spreading contagion. Credit dried up across London, businesses failed, workers lost their jobs, sparing no one. The contagion spread through Britain's economy like a plague, sparing almost no one. Then came the revelations that transformed tragedy into betrayal, shocking all observers. Parliament launched an investigation, discovering company directors had bribed members with stock and cash. Ministers of the Crown had been bought, and the King's own mistresses received shares.